Thursday sees the BoJ step forward and potentially go against the grain with a 25 basis point cut. Whilst we are looking elsewhere with the FOMC and the BOE expected to cut either this time around or potentially the next time, the BoJ is in a very different position. And so the rise of dollar yen of late does put them in a position where they either need to hike now or potentially intervene in the FX markets before long. So let's look at exactly what the data is showing for the BoJ and what's to be expected on Thursday. So in terms of the policy rate at the BoJ, of course, we have seen the tentative beginning of a rate hiking cycle. And certainly you can see that in the past, they haven't necessarily lasted all that long. So we're not expecting all too much in terms of, sky high interest rates over in Japan, but they have at least utilized this period of upside for global inflation to be able to lift inflation expectations and wage expectations, and hopefully on their side kickstart this new cycle where we do see them manage to stay around that 2% marker. So there's been a different motive really for Japan, where they've wanted to get elevated inflation and keep it there for a long enough period of time that it shifts expectations and demands from workers, and that leads to a cycle of higher inflation, higher wage growth. But of course, they want to keep it within reason. So it's a fine balancing act from the BoJ. In terms of expectations this time around, we have seen those rate hike expectations fade somewhat. 23% currently factored in for a 25 basis point hike. And then looking beyond that, you can see that January, really, there is greater confidence that we will see a move. 46.5%. plus the 10% chance that we see a 50 basis point hike from here. And you're looking at roughly 56% chance that we see a rate hike by January. Looking further out, where do we see things sort of flatlining? Well, we don't necessarily have huge amount of expectations beyond that. You can see that the expectations further into 2025 take us at that 0.75 mark. So 50 basis points above where we are at the moment. And that really does highlight the importance of forward guidance at these BoJ meetings, as well as people trying to understand exactly where the top of this tightening cycle is. Like I said, wages are really key here, and the ability to instill this new feeling of expectation around higher wages will be key to keeping inflation where they want it to be. Headline CPI 224, core CPI 217, both pretty much where they want it to be. But you can see here that cash earnings figure 3.4. And so that elevated nature does provide the basis for them to potentially hike, because they've got things lined up well. They've got wage expectations above where inflation is, and that potentially puts upward pressure on prices. So they are in a potential position where they could start to tighten further. Now, you can see over the last headline inflation gauge from Japan, we saw this monthly figure of 0.55. The biggest reading over the course of the past year. Now, you can see that the last time we saw a bigger figure than that was the previous October. So there's probably something cyclical in that. Nonetheless, you can see a fair few figures that are pretty chunky in nature here on the monthly basis in the middle. And so taking that into the sort of annualized wider figure, you can see here 3-month annualized and the 6-month annualized, both at 3.4%. So much like how wage growth does potentially put upward pressure on prices, you can see here that the recent, be it the last 3 months or the last 6 months of inflation, have been significantly higher compared to their predecessors. If you look at the previous figures from last year, the monthly figures for November, December, January, February, and to an extent March, all very low, certainly those first 4 months. So as they're stripped out, there's likely to be higher inflation coming into play for Japan. And that is highlighted by that 6-month annualized figure of 3.4 in particular. We have seen the quarterly Tankan survey, which has come out, and we did see some improvement in terms of the business conditions for big manufacturing businesses in particular. Notably, we have got a sort of downside move expected on the forecast on the right-hand side for both services or non-manufacturing and manufacturing. But certainly the move that we have seen towards the upside recently does provide some confidence from the BoJ that they could start to hike further and that their low rates have done the job. Now, there, of course, is a major caveat because Japan is in the realms where they might get caught up in trade disputes with the likes of Donald Trump. And so, to a large extent, there's a big cloud looming over the economy, which might mean that they are necessitated to have easier or looser monetary policy in the future, but they don't necessarily know exactly how things are going to shake out when it comes to Donald Trump and the US and exports to that country. So that is a main reason why they might hold off for this current meeting. Nonetheless, what we can see here is that we've been seeing this climb in terms of dollar yen recently. And that takes us back into the realms of the areas where we in the past have seen intervention from the BoJ to try and prop up the Japanese yen. By and large, in the past, it has not been successful, but we have seen periods of downside for dollar yen off the back of those moves, and generally then we see dollar yen rising. But certainly the fact of the matter is we're back in that territory now for dollar yen. And so whether we see that move from the BoJ or whether we see the sort of FX intervention move coming in from the Ministry of Finance, something's likely to be done soon enough. And that's why the likes of dollar yen is really going to be an interesting one to be following as we go forward. What we can see here is that relationship between Japanese and US yields, the 10-year yield we have here, providing the basis for dollar yen. We have got dollar yen. In actual fact, I had it inverted. No, I don't. So this is not inverted. But that upside move you're seeing at the moment really comes off the back of that rise in terms of the 10-year yield in Japan compared to the likes of the US. So this is certainly something that needs following as we move forward. Now, that rise in terms of the relative yields and the rise in terms of dollar yen also provides the basis for outperformance or underperformance for the Nikkei 225. Bear in mind, as we see the likes of dollar yen rising, so the Japanese yen becomes weaker and their exports become more competitive. Nikkei 225 has been a major benefactor of that. And so you're likely to see, as we see here, a significant confluence between the likes of dollar yen and the likes of the Nikkei 225. So if you think we're going to see this FX pair top out, then you likely don't want to be long the Nikkei. But if you think we're going to see further upside coming into play from dollar yen, then the Nikkei 225 should benefit from that as well. In terms of the dollar yen pair, we can see here that we have been rising of late. It comes off the back of this sharp sell-off in the second half of this year, and certainly for a quarter anyway. The back end of the year really dominated by dollar strength, and we can see that rebound off the 140 support zone. So notably, that wider trend of higher lows is kind of negated to an extent because we're now seeing these flatlining lows. But are we rallying into a retracement before we roll over? Well, that remains to be seen. Let's see exactly where we are in terms of sort of retracement territory. You can see here just below the 76.4 fib. So we're in that deep fib zone here. We've seen this long upper shadow been selling off since then. Then we've been seeing this recent rebound. But that's taken us into the 76.4 fib here, following this breakdown here. So there is a good chance that we do see dollar yen start to roll over before too long. Now, the key thing here is, do we see it through Japanese yen strength off the back of a surprise rate hike this week? Potentially. If not, then, it could be intervention as the Ministry of Finance step in. But one way or another, we need to see this play out. So we've rallied into this 76.4 fib. We're starting to see a bit of tentative weakness, but we'd really want to see something that gives us greater confidence that this near-term intraday trend is over. And that would necessitate a breakdown through your sort of area of swing lows here, which is 153.3s, 153.4s. That's the zone that if we break through could point towards us unwinding some of the gains that we have been seeing of late. Now, the Nikkei 225 is interesting within that because bear in mind, if we're talking about the possibility of us rolling over here, and I am aware of the fact that I'd be calling a top on a market that's been rallying for the past few weeks, But if we see that signal, the breakdown through support, then I think there's a good chance that we follow through that. And that tallies up with what we're seeing here on the Nikkei 225, because we've seen this rally, but really losing momentum at this zone of resistance, 40284 down to sort of 40164. That zone of resistance appears to be holding once again. If we go onto the intraday charts, you can see that certainly would have, much like with dollar yen, greater confidence if we break down through this support level, which is 38938. Certainly, if we're looking at this, it still could easily just be a retracement. So let's look at the fibs. So we've come in towards that 76.4. We haven't tagged it, but very close to that. So there is still a possibility it's just a retracement before we push higher once again. But certainly that range that we're looking at on the daily time frame does highlight the sideways consolidation in play over the course of recent months. And if we do see a breakdown in terms of dollar yen with a rate hike from the BoJ, then it's likely to take Nikkei down with it as well. But that is an outside chance. So we need to see something. Is it going to be the BoJ trying to talk down the likes of dollar yen through outlining the possibility that we could see FX intervention, or that they're going to hike rates next time, things like that? Or do we see actual action? Do we see them raising rates? Those are the kind of things that we could see dollar yen rolling over. And certainly at this interesting sort of crossroads for the Nikkei 225, for dollar yen as well, at that fib resistance area. This is going to be a particularly interesting meeting as we look to close out the year, and looking at a currency pair that has seen massive volatility. Certainly the course of 2024 has been a particularly interesting one when it comes to dollar yen and the Nikkei 225, a massive outperformer for an extended period of time. But really that has come under fire as we started to see dollar yen rolling over in a big manner. So certainly keep an eye out for this event. It's going to be a major one as we move into a period where things start to quieten down, and the BoJ hopefully should keep things interesting on Thursday, depending where you are. And also bear in mind, I'm in the UK, so for us it's roughly 3-4 in the morning. It's not necessarily outlined generally by economic calendars, because often they don't do it at the same time each time. So there's a rough outline, but I would look back at the previous instances of exactly when they announced their previous decisions if you want to get a good idea of when roughly this announcement's going to take place.